Hey everyone, welcome back to Nadlin Forum Podcast Daily, your go-to for real estate, mortgages, and the business headlines that might actually keep you awake at night. I'm Ruby, and as always, I'm here with Lior. Lior, did you see these Q2 GDP numbers? I blinked and suddenly the US economy's put up a 3.3% annualized growth. It's like, oh hey, surprise.
Yeah, it's wild. I mean, everyone thought it'll be around 3.0, some said 3.1, and then boom, 3.3%. That's not just beating expectations. It's kind of blowing them away. And we're always talking about the consumer piece, right? Because that's what keeps, often keeps real estate and everything else ticking here. Consumer spending up 1.6%. That's not a small number.
Honestly, I might have played a small part in that, if you count my last target run as robust economic activity. I swear, sometimes retail therapy genuinely feels like I'm doing my bit for the GDP. But no, seriously, Lior, do you think American consumers are, unstoppable? Or are they just kind of powered by caffeine and buy now, pay later debt at this point?
That's actually a good question. I mean, if we look back, even last week when we talked about those invisible BNPL debts, Americans somehow they find ways to keep spending. It's impressive, but also a little bit worrying. But what stands out is, amid all the tariffs, inflation, anxiety, everything, they're still willing to spend. For investors or anyone in real estate, that's like the lifeblood, right?
That's it. And I mean, to your point about people finding ways, you were spot on in that episode. The stats show not just individuals, but businesses are still pretty confident. But yeah, when Americans open their wallets, it ripples everywhere. Housing demand, mortgage activity, commercial projects, it all kind of rides on whether people are out spending.
Exactly. When consumers are optimistic or just keep spending out of habit, real estate feels it first. Home sales, leasing activity, there's just so much tied to that. So you see 3.3% on the GDP, there's movement below the surface. It's not just numbers on a page. It's every property showing, every mortgage app, every lease signed out there.
So, you know what really caught my eye? The part about imports dropping almost 30%. That's not just a blip. Apparently, there was all this business stockpiling earlier in the year, kind of like panic buying for businesses, so less need to import now. And suddenly, net trade actually helps boost the GDP? That's kind of rare, isn't it?
Absolutely. Normally, imports are growing, not shrinking like this. But you're right. Earlier stockpiling means companies already have what they need sitting in warehouses. So, fewer imports. And that mathematically helps net trade. But the part that's huge here is private domestic demand was up, 1.9%? That's the number the Fed keeps staring at because it's a peek at whether households and businesses are still actually building and buying stuff here in the States. That's strong underlying demand.
Yeah, and I always kind of wonder, do you reckon these trade dynamics ever ripple into real estate markets overseas? Like, say, in Israel or back home in Australia? Sometimes local stuff is so influenced by global trade mood swings. I mean, just look at how fast mortgage and property sentiments change when the US flexes even a little.
Oh, totally. I've seen it, especially on the tech side and logistics. Israel's property market is small, but when US trade patterns flip, suddenly there's either tons of American companies looking for office space or everyone's in wait-and-see mode. Australia, I think, Ruby, you can probably speak to this more, always felt even more directly connected to global trade. Yeah?
100%, especially when it comes to big-ticket things. Commercial builds, ports, warehousing. It's a domino effect. Even the small fry investor feels it through currency wobbles or sudden shifts in who's buying what. Honestly, in both markets, when imports crash or demand spikes, it sends planners scrambling. And that private domestic demand, it's almost always what steadies the ship when global stuff gets weird.
And that's where real estate gets interesting to me. When trade is up and down, but internal demand's still strong, property stays resilient. Investors here, same in Tel Aviv or Sydney. They watch those fundamentals first before panicking about the headlines. But yeah, this quarter was a bit of a curveball. Even though exports dipped, the import side and domestic activity basically saved the day for overall growth.
But okay, let's get real for a sec. Is this pace actually sustainable? So first half of 2025 averaged what? 2.1% growth. Feels good, but economists are already pulling back a bit, saying we're probably heading for closer to 1.5% as tariffs and, global jitters keep making life interesting.
Yeah, and look, core inflation held steady at 2.5%, right in the Fed's happy zone. So for mortgage people, for real estate folks, that is a nice thing. Means the Fed probably isn't going to go wild with rate hikes. But here's what I keep hearing from clients. Some are trying to time the market. Should I refi now or later? Should I buy or wait? Had this guy last week, he's thinking if growth slows, rates might dip and he'll catch a better deal if he waits. But I told him, you can always wait forever, but if the deal works today, sometimes just go for it.
Yeah, people love to try and outsmart the market, don't they? I mean, even in Oz, same thing. Folks spend months calculating and recalculate, never ends. The forward look says, okay, maybe Q3 is 2.2% growth. Not bad, but clearly the sizzle's wearing off a bit. Lior, do you lean toward advising investors to act now while numbers are decent, or ride it out to see if things cool down and bargains pop up?
I mean, it's got to be about your own numbers, your life situation, not chasing headlines. We talked about this in earlier episodes, especially that one about mortgage spreads, how timing sometimes matters. But too much waiting can cost you. With core inflation steady and Fed not panicking, it's stable enough for most to make a reasonable move now if the deal is right. But nobody's got a crystal ball, right?
That's the theme, isn't it? No one's psychic. We're just working the odds. Key takeaway, economy's not overheating, but it's holding up. Maybe things cool a touch, maybe not, but resilience is still the name of the game for now. We'll keep an eye on the inflation numbers and trade moves for you all, and maybe report back after my next target haul and see if I moved the needle again.
Yeah, and I'll be fielding more calls from people wanting to time the perfect mortgage. We'll keep breaking it all down, so make sure to catch us next episode. Lots more real estate and finance news to come. Thanks, Ruby. This was fun.
Always awesome, Lior. Thanks, guys, for listening. We'll see you soon. Cheers.
Bye, everyone.